Hey everybody, today is Wednesday the 13th of September and the market still can't make up its mind. We've got the 5-day moving average now rising as we got rid of this data over here and replaced it with higher data. So, that's rising, but we don't have a pattern of higher highs and higher lows. This might be a higher low, but for now, it's just kind of stuck in a range with a downward little bias here the last couple days at least. On the daily time frame, that 20-day moving average is curling up underneath it, and that will continue to rise tomorrow as we get rid of this data. The 50-day moving average continues to rise as well. We are still having problems, though, with the anchored volume weighted average price from this recent high right here. And when we look at the anchored VWAP from the high this year, you can see that's also in this zone as well. So just a lot of indecision, no resolution to this little frustrating range. As I mentioned on Twitter, you might have seen that a lot of our stocks that we're involved in have been working to the short side. We've got some great shorts in Kava and Crocs and IPG and FSLR. These stocks are, paying us, to wait for the market, basically. But meanwhile, as I always say, it's each stock based on its own individual merits. And since the short stocks are the ones that are working for us, we'll just, let those work for us until they don't. And then we'll flip to longs as the market tells us that's the appropriate thing to do. But with the NASDAQ still kind of stuck in a range here as well, it's not time in there. Now, we did see the pattern of lower highs and lower lows reverse today. We do have what appears to be first a higher high and then a higher low to confirm it. So the next higher high is where we could get the upward momentum. And keep in mind, tomorrow, this data drops off the 5-day moving average. So right from the start, unless we gap down right from the start, even if the market's sideways, that 5-day moving average is going to start to rise. So keep that in mind. But again, it's just still a bunch of indecision. If we look at a trend line off of this peak right here, you might even make a case that this is a continuation pattern, this being a shoulder, this being a head, and this being a right shoulder. I know a lot of people are talking about the obvious shoulder, head, shoulder this way, but we are in a primary uptrend, as we know based on what we observe on the weekly time frame. So maybe that's just a little bit too obvious. I don't know. I'm not here to make a big wild bet on what's going to happen. I'm a trader. I'm going to wait for it to resolve and then listen to the message of the market, try to get involved with what it's telling me, and then move out of the way if it says, you know what, I gave you a buy signal, but that failed. So I've got to either listen to it and take a small loss or fight it and hold on and think that I'm right and the market's wrong. And that's, of course, a stupid way to think about the market, because the market makes the final decision as to who's right or wrong, which is why I never like to listen to other people's opinions. I really don't. It's not that I don't care. I mean, I guess I don't actually, because the market, the price tells me everything I need to know. It's not up to the market it's not up to me to listen to individuals who are going to change my mind based on what I'm seeing. What I'm seeing is price-based. It's objective, and that's the way I try to keep it. So, that's my master, is price action. And, if the NASDAQ can maybe tomorrow get back above this level, that could lead to some upside. I would say if we don't make a lower low first, then a reasonable stop would be underneath this level, as this could be that inverted head and shoulders pattern on the NASDAQ. The Russell 2000 continues to dance right along this anchored volume weighted average price from the beginning of the year. And yeah, that's where the 200-day moving average is approximately as well. But, we've got the anchored VWAP from the beginning of the year was also useful in February and in January. The 200-day moving average gave us no value really whatsoever. So I view the year-to-date anchored VWAP more important. And in this market, the obvious pattern right now is that this is a shoulder, a head, and a shoulder right here. So shoulder, head, shoulder, and breaking that could lead to a disaster. Or what it might end up doing, break below there, suck in some short sales, trigger some stops, and then be able to rip higher, maybe, in the last couple months of the year. But right now, there's just no reason to be involved in the Russell 2000 that I can see. The semiconductors remain our really area of concern, I think, more so than any of these other groups, because as we've noted, ad nauseum over the decades, these guys lead the NASDAQ, and the lead NASDAQ for a large part leads the rest of the market as well, because we're in a technology world. And the anchored volume weighted average price from the August low continues to be a barrier on the upside. So until we can get back above that, and ideally see the 5-day moving average flat to rising, which should occur tomorrow on any strength. If it can do that, then perhaps we get a squeeze in the semiconductors. We go in and close this gap, and that could, be the impetus for a continued upside in the NASDAQ. So I don't know what's coming next. I'm prepared for anything, but meanwhile, I'm taking it one stock at a time. I know I am staying the hell away from biotechs as far as long trade candidates. They just continue to look like garbage, and they look like they're on the edge of another breakdown, having trouble with the declining 5-day moving average and the anchored VWAP from this low right over here. They're in a confirmed downtrend below the declining 20, 50, 100, 200-day moving average, year-to-date anchored VWAP, etc. The weekly time frame, maybe we're headed for a test of the lower end of this range, and that still presents a lot of risk here in biotech. So unless you're interested in shorting them, I don't really see much opportunity in there. The financial stocks, these guys have been behaving a little bit better. They pulled back the way we wanted them to today. Now let's see if they can follow through a little bit on the upside. I don't know what that line is. Let's get rid of it. But the pattern is now that we've got this higher low right here, and yesterday we made the higher high. But as noted, we don't want to buy that higher high because it was extended at that point. Instead, you want to see it refresh, pull back like this a little bit, and then if you're interested in buying the banking stocks, the financials, perhaps you buy them on strength over here, maybe a stop under there, or even under whatever this higher low might end up being if it does in fact carve out a higher low. Energy names continue to have problems with those previous levels where they've had resistance. So that, we jump from this level up to the next level. Now it's just consolidating. There's still action in the individual names, and that's where the focus should be.